This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, May 19th, 2016. Euro dollar. So the euro is finally broken down to take out some key support at 112.17, with this break now potentially exposing the next major drop down towards the 108 to 110 area. At this point, this break is significant as it suggests that the market has topped out by that medium-term resistance just shy of 117.10 after the market had stalled out at 2016 highs at 116.17. This could set the stage for a more significant decline over the coming days and weeks, but initially, again, this opens the door for a move down towards the 108 to 110 area. However, it is worth noting that we should see a close below 112.17 to really convince and strengthen this outlook. If the market on Thursday is unable to close below 112.17, this would suggest that we potentially could see a false break here in favor of what could be another bullish upside. But again, a break below 12.17 would do a good job of establishing bearish momentum and expose a move down towards the 108 to 110 area. Sterling dollar. So cable saw a nice bounce in recent trade with the market pushing all the way back above 146. But again, while this market holds below 146.70 on a daily close basis, and certainly while it holds below that 147.70 high from the 3rd of May, the overall pressure still remains on the downside with risks of another topside failure and bearish resumption. The structure on the broader basis has been quite bearish over the past several months, and it would really take a break back above 147.70 to confirm or strengthen the possibility for a meaningful base. Again, until then, there is risk for another topside failure and bearish reversal. Certainly a break back below 143.33, that low that we saw back on the 16th of May, would really do a good job of accelerating declines. Dollar yen. So dollar yen has seen a nice little bounce with the correction out from those multi-month lows at 105.55 continuing as the market pushes back above 110. But here too, the downtrend remains firmly intact, and the market should be looking to put in a lower top somewhere around current levels and ahead of 111.89, ahead of the next downside extension below 105.55. At this point, it would take a break back above 111.89 to take the immediate pressure off the downside. Euro Swiss. So Euro Swiss remains quite constructive with the market continuing to be very well supported on dips. Next break above 111.10 would expose a move up towards the recent multi-month peak and yearly high at 112 further up. At this point, any setback should be very well supported towards 109 with only break back below 108 to compromise this outlook. Aussie dollar. So Aussie has pulled back from its 2016 peak at 78.35 with the market breaking down well below the 200-day moving average and exposing a deeper drop over the coming sessions back towards psychological barriers at 70. At this point, the market should be very well capped into rallies towards that previous support now turn resistance in the 74.15 area. Dollar CAD. So dollar CAD has seen a break higher in recent trade with the market pushing back above 130 to expose fresh upside towards next key resistance at 132.19 further up. At this point, it looks like the market is putting in a higher low by that recent low at 27.72. And again, while the market holds above this level, there's risk for a more meaningful base and acceleration to the top side. Kiwi dollar. So Kiwi has pulled back from its recent 2016 peak and overall remains pressure to the downside with a break and close below recent support at 67.16 to open the door for an acceleration of declines towards next key support at 65.46 further down, which guards against that 2016 base all the way down around 63.47. At this point, any rally should be very well capped and continue to be very well capped ahead of 70. SPX 500. So the S&P 500 is looking like it's carving out a major head and shoulders top on the daily chart after once again stalling out above 2100. Look for a break and close below 2021 to strengthen this outlook and accelerate declines towards a measured move objective in the 1930 area. At that point, the market will be looking towards a retest of the 2016 base at 1808 further down. Gold. So gold has seen some nice pullbacks in recent trade, though ultimately the structure here remains highly constructive following that break that we saw several weeks back above 1190. There is possibility now for a move lower towards 1200, but while the market holds above 1190, the market should eventually see a higher low and fresh upside back above the 2015 peak at 1307 towards 1400 further up. Again, on a short-term basis, there is risk for a pullback, but these pullbacks are expected to be very well supported ahead of the next major upside extension. Only a close back below 1190 would really compromise this constructive outlook for gold.